McDonald's coffee. 3 creams, 1 sugar, and a large. Good stuff. So why McDonald's? Of all the investments I could talk about, why McDonald's right now? There's COVID vaccines. We could talk about Pfizer. There's tech companies that are going out of control. We could talk about Tesla. We could talk about Amazon, Google. Why McDonald's? Well, I have this theory about the ability for a consumer with their perception of the economy and certain products to be able to understand a company better than Wall Street. And what better example than McDonald's? Everyone has either been to a McDonald's or they've been forced to see one because a McDonald's is always about 50 miles away from you, no more. The McDonald's corporation right now is likely the biggest restaurant company in the world, and they span the entire world. You can pretty much get a McDonald's Big Mac wherever you go in this world. So with that in mind, I want to note that this is not advice. Please do your own research. I am not currently a financial advisor or financial professional, and I don't currently own any of this stock. I am just discussing it for you to do your own research on. So what I've found with McDonald's is that they typically, at any time of the day, have a 10 to 20 minute wait in their drive-through. The COVID-19 pandemic really hasn't affected them. People don't really go inside. They just go through the drive-through and get their food. They've done pickup. They've done DoorDash really well. They've been able to react to the pandemic and continue making profits through it all. Now, what's really amazing about McDonald's isn't just the lines are so long, but how, relatively speaking, fast they can get throughput through that drive-through. Throughput is pretty much how fast people and products can get through a certain company. So the throughput of McDonald's would be how many consumers they can get through the drive-through, and you want your throughput to be as fast as possible. Their competitors, though, seem to have a problem with that. There's a little anecdotal on my behalf, but other restaurants really struggle to get that throughput through their drive-through. Maybe it's because McDonald's has poor quality food than them and they don't have to really take as much time to prepare it by the time they get the order. But in any case, it's very obvious that one, people like McDonald's, hence why their lines are always long. And two, they can go through that line pretty quick because of their efficient processes that they've invested in for the last few years. They've really seen that people want two things and they're adjusting their restaurants for the future. The first is more luxury level coffees. The McCafes have mochas and all this other stuff that people are ordering. You can see it on the drive-through menu when they order something. It's a lot of mochas, a lot of these different kinds of drinks that are competing with Starbucks. So they've really tapped into that to kind of give that luxury coffee without the price being that expensive. On the flip side, they've also been realistic about nutrition. People are concerned about how bad McDonald's food is for them. And though they haven't really changed much in their main menu, the Happy Meals have changed significantly in the last decade. Now your French fries in a McDonald's is very small, and they've replaced the extra French fries with apples, with applesauce, with just more nutritious choices for better or for worse. We can argue all day about if it really is nutritious or not, and I would completely accept your point of view that it is not nutritious. But regardless, the point is they've made that kind of change. They've acknowledged that this is a problem and they're trying to figure out ways to fix it. Now, all that being said, McDonald's, having a lot of great things going for them. Their base food on their menu is still very addictive. That's probably the right term for it, for better or for worse. There's still a lot of risk right now in Q4 2020 of buying McDonald's. Right now, their PD ratio is around 30 to 32, give or take, the day you're looking at their price. That's relatively high. for a non-tech stock. That means that they have to make up ground on being a growth stock. They can't just stay where they're at. And based on all the examples I've given in the beginning of the video, I think they can actually grow. I think they have real potential to do just that. And maybe their price is justified. Second, their price is also at all-time highs. If you're buying McDonald's right now, you are buying at the peak. Now, you can look at it two different ways. You can say, well, that's the peak, which means that maybe it's going to go down afterwards. Or you can think of it as the beginning of a new peak that's about to happen. That's for you to figure out based on what you research. But based on what I'm seeing, I think there's opportunities to get into McDonald's because they're really hitting their competitors hard and they're able to give what the people want. My name is Chester Johnson, and I am the co-founder of Stockteamup.com. We do videos for the investment meta every week. Thank you, and subscribe.